Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler Trading with your weekly Edge show. Let's take a look at what we're going to be covering today. First up, we are going to look at some of the more impactful news that drove price action last week, another volatile week in the markets. Also, we're going to look at where we closed for the week. Are the markets poised to trade higher or lower as we move forward? Viewer question of the week, and it is all about earnings, how to trade stocks after they release their earnings. And I'll share two very recent updates as companies that did report this week and provide you with some tools to help you successfully trade stocks after they report their earnings. So let's take a look at some of that economic data. Last week, we did receive two separate inflation reports. Core inflation, it did have the smallest increase in 6 months. The other inflation number was wholesale prices, and they jumped in March, all about that high gas and food prices. So a little bit mixed in these reports, but even more important, where investors' response was mixed. So there's an awful lot of uncertainty still in the markets. We will review that and much more as we move forward. Bond yields did rise to their highest level in over 3 years, and we will talk about the impact that that has had on the markets and continues to have as rates rise. We did get some retail reports last week, retail sales as well as consumer sentiment. Both numbers were up, and this is despite, again, that very high food and gas costs. So we are in a high inflationary period, yet consumers are still dipping into their pockets. So that is good news. Next week, a little bit light on the economic calendar. There is housing data and manufacturing PMI, another inflationary report, is due next week. From here, let's go ahead and take a look at the markets. Where did we close the week? And first up here, we have a daily price chart of the S&P 500. The S&P was down 1.9% for the week. And of course, we had that shortened 4-day week. But you can see the volatility as investors continue to digest economic reports, headline news out of Ukraine, and of course, earnings reports. So a lot in the way of volatility. And at the end, we did close the week. I have this headline as above, but unfortunately, we did dip below this red 50-day simple moving average on the close. That 50-day is at about 4419. The markets closed the week at 4401, so just a bit below that 50-day, but still not what you want to see, particularly given that the RSI and the stochastics are both in negative territory. From here, we want to, of course, be on top of where that tech-heavy NASDAQ has traded after last week's deterioration, and it had another tough week. NASDAQ names this week were down almost 2.5%. And we can see that it now has what I'm calling a life below each of these simple moving average. Not what you want to see. We are in a downtrend. Your next possible area of support is this low here in January. We have a negative RSI and stochastics as well. So your momentum is negative in addition. So not good news on the NASDAQ, mixed but primarily negative on the S&P 500. So from here, we can take a look at the underlying sectors within the S&P 500 because there are pockets of strength, areas that are in an uptrend despite a broader market that is not healthy. So what we're looking at here is a daily 2-month price chart of those 11 sectors within the S&P 500. And I like to add this relative strength indicator, this RSI. I want to sort it in descending order. So up on this upper left side quartile, we are looking at areas that are outperforming the broader markets, and then this lower area are underperforming areas that generally you want to make sure you're not heavily weighted in. So let's take a look at these stronger areas. And again, this week, we do see a lot of these defensive areas here in the forefront: consumer staples, utilities, real estate, and healthcare. These four areas are not only defensive, they also offer stocks that have high yields, which are a wonderful hedge during this period of high inflation. Energy still up here at the forefront. It had been flat for a couple of weeks here, but we can see it's starting to just slowly emerge into a bit of an uptrend. It was the second performing area for the week, up 0.7, and that's relative to an S&P that was down almost 2%. Another area that I did want to highlight as we move forward here were some of the weaker areas, and that is technology, the worst performer for the week, down 3.8%. This is all about that move away from growth stocks. And I mentioned those high yields in the beginning with the yield. We'll take a look at a chart of yields. And the high yield are not good, or high interest rates, not good for these growth stocks. It really reduces the value of their future growth. So we are seeing tech. I'll get more into specific areas in our next segment, but technology under distribution in negative territory. And also the heavyweight FANG stocks also were down quite a bit last week. And technology, Microsoft is a heavyweight, as is Apple, both stocks down on the week, so not helping this tech sector either. So let's go ahead back, take a look at another specific area that is outperforming, and that is basic materials. This was the top performing sector for the week, up 0.8%. This initial move upward was all about Russia's invasion of Ukraine and that reduced commodity supply in the face of high demand pushed a lot of these material stocks. It's going to be gold, aluminum, silver, and so on, up to this area before pulling back, given this extensive advance, very normal, back to this 50-day, and now on the upper right side, poised to break out of a near-term 3-week base. So this is one area that I will share with you individual names as we move forward. So from here, let's go ahead and take a look at some of those underlying industry groups behind the scenes of those ETFs that show us the sector work. And what I've done is formulated here a view of various areas that are quite impactful to the broader markets. And again, added that RSI, and then I'm going to sort it in descending order so we can see again even more refined view of what is working and areas that are underperforming. So here's a quick look here at the yield on that 10-year treasury, and I'm going to pull up a weekly, and you can see that we really are at an elevated level, certainly relative to the last couple of years. This in turn, I talked about it impacting those tech names and other areas as well. Mortgage rates hit the highest rate since 2011. They are at 5% now. So the impact there with negative housing stocks as well. So taking a look at some of these other underlying industry groups, I talked about the basic materials being up in the forefront, and gold certainly would be among them. GLD is the ticker symbol here. This group was up about 1.5% on the week. Most important here for me is the fact that this MACD black line is crossing up through the red, indicating a nice confirmed uptrend for gold stocks. Brent crude back here up above that $100 per barrel. That seems to be the real benchmark. It closed the week at 108. And in turn, we did see that nice little uptick in energy stocks for the week. As it relates to technology, let's take a look at semiconductor stocks, and you can see this really clear-cut deterioration in semiconductor stocks. I'm going to be talking about a company in this industry that reported this week, and you'll see that this group pressure really has an impact, unfortunately, in a downtrend. And from here, I did want to go ahead and share with you a couple of companies that have reported their earnings recently, because earnings can often be a catalyst for a stock and then in turn other stocks in its group or otherwise. So we're looking at a daily price chart of Delta Airlines. They came out with their numbers earlier this week and they were well ahead of estimates. The company has been able to increase airfare, which has overridden the increase in energy. Also, travel has picked up quite a bit. So we can see this gap up in successive days here on very heavy volume, very constructive for Delta. We did see other airline stocks rallying in tandem, not quite as strong as Delta, however, but also a number of hotel and other travel-related areas were positively impacted by this move higher on positive earnings results. From here, I did mention to you a rather large semiconductor company that did report this week. It's Taiwan Semi. We're looking at a daily price chart here, and you can see with that group, we just highlighted that semiconductors are in a very confirmed downtrend. The company did come out with equally strong numbers. They were well ahead of estimates, and management guided their earnings estimates higher for this year, but you can see that despite an initial rally, the stock pulled back and was down 3% despite positive earnings. So that's really telling us that the overall industry group of that particular stock is going to have a more heavier weight than the actual earnings. One other name that we can take a look at, and that will exemplify this again, is the Simply Good Foods company, SMLP. And this is a consumer staple, a food company, and that particular industry group, as mentioned, is in the forefront. It's a relative outperformer. And this company did come out with their earnings a little bit earlier on April 6th, but we can see this very nice confirmed uptrend in response. So from here, I'm going to go ahead and I mentioned, kind of share with you ways that you can, in fact, tell if that stock is going to continue higher or not after reporting strong earnings. And from here, quite simply, drill down to a 1 hour price chart, and that in turn will be very telling. Here's that April 6th release of earnings, and we can see that the stock had a very constructive response to those positive results. From here on the 1 hour, you want to make sure that that third, or actually the second bar from that first bar, does post a higher price than the high on that first hour. And it's historically or statistically, that is telling you that the stock certainly has a much better chance of continuing to trade higher, which this stock has been able to do. Of course, after a significant return such as this over a 3-day period, you will get a pullback oftentimes. And similar to this pullback period, your re-entry point is going to be when the stock breaks back above this 5 and 13 hour simple moving average in line with positive momentum, which indicates further upside. Let's take a quick look at Taiwan Semi as a comparison. After the company reported very strong earnings on this 1 hour, we did get that initial spike in price, which did not carry through, and subsequently this would be your signal that further near-term upside was not on hand for that particular stock. I'm going to leave it at that. Everyone have a wonderful long weekend, and I look forward to seeing you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.